Welcome to The Explainer, where today we're diving straight into the humanoid robot gold rush. We're talking massive buzz, insane valuations. So what's the deal? Is this a genuine breakthrough or just a giant bubble waiting to pop? Okay, let's just start with a number that sounds, well, kind of crazy. Picture this, a company with zero sales, not a single robot sold, is suddenly valued at nearly $1 billion. No, I'm not making that up. This is happening right now. So you have to ask, right? Is this all just hype, or are we on the verge of something absolutely massive? So, here's how we're going to break this all down. We'll look at the bubble arguments, then see what's actually happening in the real world. I'll give you a checklist for spotting the winners, we'll dig into some sneaky investment plays, and then we'll get to the final verdict. All right, let's get into it. The big thing you need to grasp right away is that Wall Street is basically telling two completely opposite stories about these robots. So on one side, you've got the pure hype, right? The big dream. Valuations are based on this idea of automating everything, and investors are chasing this winner-take-all scenario, kind of like with the iPhone, where one company could just dominate a market worth trillions. But then you have the reality check. The first real contracts are actually being signed. Robots are showing up in factories. And that's the real tension here, isn't it? The dream versus what's happening today. Okay, let's play devil's advocate for a minute. Why does this whole thing smell like a classic bubble? Because honestly, the arguments are pretty strong. It really comes down to three things. First, you've got these dream valuations. They're not based on sales, they're based on the promise of automating a massive chunk of the economy. Second, everyone's betting on a monopoly. The thinking is, just like with smartphones, one company will create the robot OS with its own app store and the whole shebang. And third, you've got a classic investor frenzy. Big tech, huge manufacturers, they're all piling in, driving prices up for everyone else. It's pure FOMO. And this isn't just talk. Look at a company like Figure AI. Its valuation was reportedly heading towards $39 billion in talks. That's insane. And it was all fueled by these big-name investors way before the robots are even ready for prime time. It just shows you how wild the expectations have gotten. But okay, enough about the hype and the crazy valuations. This isn't just some sci-fi dream. Let's look at the flip side. What's happening right now on the ground? And look, we're talking about real deals here, not just flimsy press releases. You've got Agility Robotics with a legit commercial contract with GXO. Abtronics got robots working in a Mercedes-Benz factory. And get this, 1X is talking about a deal for up to 10,000 units. These are the very first signs that a real business is starting to crawl out of all that hype. So we're in this weird place, right? Part bubble, part reality. Well, the next few years are going to be brutal. A big shakeout is coming, and a lot of these companies are going to disappear. So how do you tell the difference between the real deal and the vaporware? I'm going to give you a super practical 7-point checklist. The key here is to ignore the flashy demo videos and just look at the cold, hard data. So what do you ask? 1. Are the contracts legit with actual numbers or just flimsy agreements? 2. How many hours a day can this thing actually work without help? 3. Is the company making money on each robot it leases out? 4. Can it work next to a human without, causing a problem? 5. Is it getting cheaper to build? 6. Does it break down all the time? And 7, the big one, is it learning? Is it getting better? Look, any company that can give you solid, improving numbers for just 3 of these 7 is probably a survivor. Now, here's the thing. Using that checklist right now, it's tough. Most companies don't have the answers yet, so maybe the smartest play isn't to bet on a single robot company. You know the old saying about the gold rush, right? The people who really got rich weren't the miners, but the guys selling them the picks and shovels. And that's the whole idea here. Don't just think about Tesla or Figure AI. Think about the entire supply chain. It's like the car industry. You've got a few big brands, but underneath them is this massive ecosystem of companies making everything from the engine to the tires. A humanoid robot is packed with high-tech parts, and the companies that make those parts could be huge winners, no matter which robot brand ends up on top. So where's the first boom going to happen? In the joints. We're talking about the reducers and actuators. These are the super complex parts that act like our knees and elbows, giving the robot its power and precision. Every single robot needs more than 40 of them. And here's a kicker. They're high-stress parts that will wear out. That means they need to be replaced. That's a built-in recurring revenue stream right there. So if you're looking at companies making these parts, you need to see proof.
Don't just take their word for it. You want to see hard data on their performance. How much power can they handle? And you absolutely need to see durability tests. How long do they last before they break? That's what separates the real players from the wannabes. Okay, after the joints, you've got the muscles and nerves. These are the high-tech motors and the power systems that control them. And we're not talking about the clunky motors you see in a factory. These have to be super precise, super quiet, and incredibly energy efficient, so the robot can actually work a full shift without being plugged in. For these companies, it's all about one word: efficiency. You're looking for the ones who are never satisfied. The ones who are constantly making their motors better, using less power with every new version they release. That's the sign of a winner. Look, I get it. Trying to pick the one winning component company is, well, it's tough and it's risky. So a much simpler way to play this is to just bet on the whole trend. And you can do that with ETFs, exchange-traded funds. Think of them as a basket that holds shares of a bunch of different robotics and AI companies. It's an easy way to get exposure without putting all your eggs in one basket. All right, we've looked at the hype, we've looked at the reality, we've talked about how to find a winner and even how to find the hidden gems. So, what's the final verdict? Bubble or breakthrough? You know, the best analogy is probably the early days of smartphones. Think back to like 2007. We're in that phase right now. Tons of hype, a few early deals, lots of weird-looking devices. What comes next in the next 2 to 5 years is the shakeout. The winners won't be the ones with the best demos, they'll be the ones that actually work. And after that, you'll end up with a mature market, probably with a few big players like Apple and Google, and a whole world of suppliers supporting them. There's a quote from one of our sources that just nails it. It says, "It's a matter of timeline, not direction." And that really is the key takeaway here. People aren't really arguing if humanoid robots are coming. The only question is when. The train has left the station.
So, how do you keep your head straight with all this noise? It's simple. Always come back to these 5 basic business questions. Seriously, forget the cool YouTube videos. Just ask, how many are actually working for a paying customer? How long do they work each day? Are they getting cheaper to make? Is the customer actually saving money? And is it safe? If you can get answers to those questions, you'll know exactly what's real and what's not.
And we'll leave you with this. Because at the end of the day, this isn't just about stocks or investments. This is about a massive change to how we all work, to our entire economy. The future of labor is literally being built right now. So the only question left is, where will you stand?